All right, good morning. Thank you so much for making it. Can't believe you guys made it in such an early morning session. My name is Wayne. Today, I'll be talking about stablecoins as digital bearer money, which I feel is stablecoins' core innovation and its full potential. Okay. So, how we digitized money. In the 90s, once the internet demonstrated that we can send information in real time, and we have the freedom to publish and access information, the money transfer industry started to imagine how we can digitize money so that we can send money like how the internet sends data. But we didn't try to digitize paper bills. Okay? Instead, we created closed-loop money ledgers. With remittance and payment products like Venmo, Paytm, WeChat, WeChat Pay, Alipay, and M-Pesa, we started to move money at internet speed. But as long as all users were on a single network or scheme, this digital money model breaks when servicing a global user base. Licensing, reporting, and audits per jurisdiction made universal onboarding very difficult. And the post-9/11 AML requirements made open an account a compliance challenge. So we ended up with disconnected, closed-looped money networks that relied on correspondent banking to bridge value across each other. And we had a lot of Vostro and Nostro accounts. Why? Because money was permissioned private ledgers, and it was based on a trust model. So when it comes to global money transfers, we never really had a fast global network. So what if we didn't digitize money using closed-looped ledgers? What if we try to digitize paper bills? What's special about paper bills? Well, the paper bill is a bearer instrument. Possession is finality, and verification is against the bill, okay? Not the holder. So with a bearer instrument, we don't care who the holder is. Anybody can hold it. We just care if that bill is genuine and has value. And whoever is in possession of that bill has the right to spend it and is the owner of it. So paper bills offer better financial sovereignty. Why? Anyone can hold it using any container. Right? So if it's paper cash, if I have hands, I can hold it in my hands, hold it in my wallet. I can put them in safes. Regardless of my nationality and regardless of jurisdiction, and no one needs an account. That is the financial sovereignty that paper bills can enable. So we asked, what's the best technology to digitize paper coupons and make it easy for people to access them, authenticate them, and detect counterfeits? What's the technology? Thank you. Yo. Sergio. Of course, it's the blockchain. So we created the first fast global money transfer network and we moved from disconnected closed-looped network of database ledgers to tokenized cash on permissionless blockchains. With tokens that anyone can hold and send, and where no account issuance is required. When asked about the Genius Act, Mr. Dong, he is currently the exec director of the Taiwanese Central Bank and also the chairman of Megabank, a major bank in Taiwan. He said, Taiwan had a similar payment product almost 20 years ago, and that attracted some scrutiny. But I really feel that there's a lot of truth in what he said, because he referred to EasyCard, which was available since 2002, more than 20 years ago, as the digital top-up card for mass transportation payment. And because it needs to be servicing payments for mass transportation, think about buses, MRTs, and trains, the goal was inclusive access. So it was designed almost like a digital bearer instrument. Anyone, regardless of nationality, can use it. So it doesn't matter if you're from a sanctioned country, as long as you can get yourself in Taiwan and you've got paper cash, you can use that paper cash, go to a convenience store and buy yourself an EasyCard. And with that EasyCard, you can pay anywhere and you can pay with any mass transportation system in Taiwan. So no KYC, no account issuance, and you top up with paper cash. Okay. It received the Electronic Stored Value Card license in 2010. That's the ESCVC license in Taiwan, and this license, again, requires no KYC and no account issuance. And expanded to become the most popular payment product in Taiwan. That's the EasyCard, okay? And I think that's what Mr. Dong meant when he said, oh, stablecoins. Well, we had a similar regulatory regime more than 20 years ago in Taiwan. Similarly, stablecoins are a financial inclusion booster because they enable access to currencies people need or prefer. Emerging markets, the world trade currency is the US dollar. Lots of people, businesses need access to the US dollar, and stablecoins gave them that option. And today, people in emerging markets use them for both B2B cross-border payments as well as for person-to-person retail remittances. Stablecoins are becoming a better alternative to correspondent banking. Okay. They have become a more efficient means to move value between two financial institutions, and they significantly reduce pre-funding and in-transit capital. So now, we don't need all these nostril-vostro accounts. The FIs are starting to use stablecoins. But stablecoins, they're not only a better settlement technology. Lots of people say, oh, it's a better settlement technology than SWIFT. They're not only that, because stablecoins are becoming a form of digital bearer money, right? When you receive an MT-103 telegram from SWIFT, that is not money itself. You have to go through correspondent banking to move that value. But when you receive stablecoins, stablecoins are, by themselves, digital bearer money. And so it's not only a settlement technology. A stablecoin achieves its ultimate potential when users start to believe it's money and not just a settlement instrument, and they stop settling back to fiat, they start to hold it and start to transact with it. Okay? When you receive a new stablecoin, you'd say, well, I'm not comfortable until I settle it back to dollar, until I have dollars in my bank account. Well, today, many stablecoins are seen as money themselves. So we receive stablecoin, we say, great, it's settled. I'm going to hold it. I'm going to pay someone else with it. This belief needn't be in the issuer, but rather in the stablecoin's secondary market liquidity. This is when a stablecoin truly takes on a life of its own. So we say liquidity is trust. And it's when stablecoins become money. So although we digitized money a long time ago, with stablecoins, we used permissionless blockchains to create digital bearer money. And in my opinion, that is the core stablecoin innovation. Moving forward, I'd like to share 2 observation points from me post the Genius Act. One, a lot of financial institutions, banks, regulators come and ask us, about issuing new stablecoins, and especially about local currency pegged stablecoins, non-US dollar pegged stablecoins. My opinion is there are only 2 stablecoin markets. Really, you have the US dollar stablecoin as one huge market, and then the rest of the stablecoins, okay? So when thinking about the stablecoin business, really, we're looking at 2 very different markets, the US dollar stablecoin and the rest. Because the US dollar remains the dominant medium of exchange and unit of account. That's number 1. And 2, the issuer revenue can't be forever based on float, right? So we've had long stretches of history where the short-term interest rates were close to 0. Now it's very high, yes, and issuers are getting great revenue. But throughout history, it wasn't like this. Also, in 2024, 91% of PayPal's revenue came from fees, not float. So what does this mean? Well, okay, so who's making the fees today if the issuers are making their revenue from floats? It's the blockchains, right? Masari reports past few quarters, wallet-to-wallet transfers and stablecoins account for more than 98% of transactions on Tron, for example. And Paolo also shared recently that amongst the 9 blockchains, Ethereum, Tron, Solana, 40% of fees are paid to send USDT. Okay, so today, the business model is such that issuers are making their revenue from float, while most of the fees goes to the blockchains. But if short-term rates won't stay elevated, and payments typically monetize via fees and not float, think about PayPal last year, would stablecoin issuers start to grow their affiliated blockchains to build a more robust revenue model in preparation that the revenue from floats may eventually decrease? Okay. So these are my 2 observations. And with that, there you have it. Stablecoins as digital bearer money, that's stablecoins' core innovation and their full potential. Thank you very much.